Smartest Data Quick Definitions, Initial Public Offering, an IPO. So what is a unicorn and why are companies possibly delaying an IPO? Let's go to the video to define and explain the initial public offering, the benefits and drawbacks, and at the end of the video, there'll be 3 quick bullet points to take away. An IPO is when a private company converts to a public company following the listing of its shares on the stock exchange. A listed company will be more closely analysed and will be able to raise equity capital in the future. An IPO is a major step for a private company, converting to a public company and the listing of its shares on the stock exchange. When a company becomes a public company, it opens up to greater public scrutiny, as it will have the investment community and the media gathering information on its operations and placing a valuation on its shares. The main motivation for a company to go through an IPO is the ability to access new sources of capital via the equity capital markets. The owners can release some of their wealth previously tied up in the company, thus providing them with some liquidity. In the past, an IPO was a young company with a thirst for capital listing on the exchange. Now there is the invention of unicorns, which are IPOs for over $1 billion. 3 takeaway bullet points regarding an IPO. When a company lists on the stock exchange, becoming a public company. Certainly a public company will be under greater scrutiny from investors and the media. An IPO does provide future access to equity capital and provides liquidity to the owners.